Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. Let's kick things off with some promising news from the EU. In the fourth quarter 2023, a staggering 3.2 million unemployed individuals secured jobs amidst a transition period. This dynamic shift reflects positive momentum in the region's labor market, with significant implications for economic recovery and growth. Now shifting our focus to Italy, where plans for an ambitious €1 billion artificial intelligence fund have been unveiled. Prime Minister Meloni announced this initiative to drive innovation and bolster AI projects, signaling Italy's commitment to staying at the forefront of technological advancement. Turning our attention to China's economic performance, in the first quarter of 2024, the numbers are in and they're impressive, with industrial production soaring by 7% and the service sector growing by 5.8%. China continues to demonstrate resilience and strength in the face of global challenges. Now let's take a closer look at the Turkey's Services Production Index for January. While there was an annual increase of 0.6%, the month saw a slight decrease of 2.3%. These fluctuations underscore the dynamic nature of Turkey's economy and the need for agile policy responses. Shifting gears to South America, Brazil is gearing up to introduce its own digital currency, the Direx, by early 2025. This initiative aims to enhance financial inclusion and streamline transactions in Brazil's burgeoning digital economy. Next, we turn our focus to Egypt, where a currency crisis has prompted emergency measures to stabilize the economy. With business activity dropping sharply in February, the country is taking decisive steps to restore investor confidence and mitigate the impact of external disruptions. In Austria, consumer prices have seen a notable rise, with the February CPI reflecting a 4.3% increase from the same period last year. This uptick underscores the ongoing challenges of inflationary pressures in the region. Now let's go to the Czech Republic, where producer prices have experienced a mixed trend. While agricultural producer prices rose month-on-month, industrial producer prices saw a slight decline for the second consecutive month. Now let's delve into the importance of digital payments. In a recent speech by Mr. Burkhard Balz, the member of the executive board of Deutsche Bundesbank, the rising significance of digital payments was underscored, with factors like increased smartphone usage and the growth of e-commerce. The efficiency and security of cashless transactions have become paramount. Mr. Balz emphasized the need for collaboration between public and private sectors to enhance global payments infrastructure and highlighted the potential of central bank digital currencies to revolutionize cross-border transactions. Moving on to the UK, where the leap year day is expected to inject a significant boost into the economy. According to the Centre for Economics and Business Research, the extra working day will contribute £8.6 billion, impacting growth by 0.3 percentage points. This timely boost comes amidst sluggish economic prospects, providing a welcome lift to the UK's economic performance. The latest report from UN Tourism brings encouraging news for the global travel enthusiasts. The report reveals a restoration of pre-pandemic openness in visa policies worldwide, with traditional visa requirements declining to 47% in 2023. This shift towards greater visa-exempt travel and e-visa signals a positive trajectory for international tourism, with recommendations focusing on further streamlining visa processes to stimulate tourism growth. Now let's turn our attention to the Netherlands, where flexible work arrangements are on the rise. Over 5 million Dutch workers embraced remote work in 2023, surpassing their EU counterparts. This shift towards flexible work arrangements reflects evolving workplace dynamics and highlights the Netherlands' adaptability to modern work trends. Shifting our focus back to Turkey, where the residential property market saw notable activity in January. The residential property price index recorded a monthly increase of 2.3%, translating to a real-term annual increase of 1.4% and a significant 68% rise in nominal terms. Now again in the UK, consumer spending trends paint a nuanced picture of economic dynamics. While FMCG sectors experienced a 5% surge driven by rising food prices, the tech and durable sectors faced a decline amidst the cost of living crisis. Despite challenges, consumers continue to prioritize quality purchases, particularly in essential home improvement categories. Germany's shortage of skilled workers has shown signs of easing, according to IFO survey, with 36.3% of firms currently reporting a shortage, down from 38.7% in October 2023. There is a cautious optimism amidst economic fluctuations. However, the fundamental challenge of skilled worker shortages remains a long-term concern. Back to Turkey again. Turkey's steel sector witnessed robust growth in January, with production, consumption, and exports all experiencing significant surges. Despite an increase in imports, the foreign trade deficit decreased, indicating a positive outlook for the sector. In Norway, unemployment rates have plummeted to 3.6% in February, with the addition of 14,000 jobs and a notable reduction in youth unemployment to 10.8%. And these encouraging figures reflect a positive trajectory for Norway's labor market. Now let's delve into an in-depth analysis of Slovakia's economic trajectory as outlined in the OECD Economic Survey 2024. Despite facing external pressures such as the energy crisis triggered by Russia's conflict with Ukraine, Slovakia's economy has displayed remarkable resilience. The survey projects steady economic growth for the nation, coupled with a significant decrease in inflation. To sustain this momentum and the address demographic challenges, the survey recommends fiscal consolidation, pension reforms, and investments in skills development. Additionally, measures to enhance public investment efficiency, promote gender equality, and support key sectors are highlighted. Shifting our focus to the EU's forestry and wood industry, recent data reveals a modest increase in employment from 2012 to 2022, with 3.6 million people employed in various sectors of the forestry and wood-based industry in 2022, representing a 1.4% rise compared to a decade earlier. The sector continues to play a significant role in the EU's economy. Now let's explore an in-depth analysis of persistent poverty, focusing on the challenges faced by the world's poorest countries in achieving sustainable development goals. Despite global efforts to eradicate poverty, 22 historically low-income nations continue to grapple with multifaceted challenges, and this comprehensive study examines economic and social indicators to understand the root causes of persistent poverty, including political instability, geographical constraints, and governance issues. In Turkey, the Monetary Policy Committee has announced a significant policy rate increase, raising it from 45% to 50%. This decision reflects efforts to address inflation concerns and maintain the macroeconomic stability. Shifting our focus to South Korea, where the consumer price index rose by 0.5% in February. This uptick in consumer prices highlights the evolving economic landscape in South Korea. Now let's explore the global supply chain landscape with insights from ICM and a recent DHL webinar. As the industry continues to evolve, challenges and the opportunities abound. Discussions encompass the impact of geopolitical disruptions, trends in U.S.-China trade relations, and the strategies for de-risking and the diversification. And these insights provide a comprehensive understanding of the dynamics shaping the global supply chain ecosystem. According to recent data from Statistics Estonia's exports of services reached a record high in the fourth quarter of 2023, with a 5% increase in exports and a 7% rise in imports compared to the same period in 2022. Estonia's service sector continues to demonstrate robust growth, contributing to the nation's economic vitality. Examining trade dynamics between Bulgaria and the EU in 2023 reveals a notable decline in exports by 9% and imports by 2.5%. And lastly, in Hungary, the construction sector witnessed significant growth, with a 17.2% year-on-year increase in output volume and a 10.2% rise compared to the previous month. And these robust growth figures underscore the construction sector's importance of Hungary's economic landscape and its potential to drive further economic expansion. That wraps up our economy newsletter for today. We covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching and remember to subscribe to our channel for the latest updates.